solid, right?
Okay, so we need a solid piece to our house, right? And so if we're building a house here, every house is built on a foundation. In fact, I can remember a number of years ago, after we had the fires up in the mountains, we got about 10 guys and we went up there to help clean up the ash or after the fire. And what we found out was when we got into this certain area, Seth, it looked like a bomb had gone off. And the only thing that was remaining in that area was the foundation and the chimneys. That's all there was, nothing else.
Really?
Yeah, I mean, everything was burned. And so when we talk about a foundation, we're talking about something that we can depend on. And so the foundation that we want to build here upon is two things. Last week we talked about this. So the foundation of all good financial planning is first, cash for emergencies.
Mm-hmm.
And what do you think the second one is?
I don't know.
Protection?
Protection, yeah.
Yeah, okay. So when we talk about protection, what we're really talking about is we're talking about insurance. That's what we're talking about this circle right here.
Okay.
Okay. And today we're going to be talking specifically about life insurance.
Okay. So Mike, if I need cash and protection's life insurance, and we already talked about how much cash we should have, in our last 30-minute session. How much insurance do I need?
Okay. Would you say that is a question for most of you? How much life insurance should I have? Isn't that a big question? I think really the big questions are, how much life insurance should I have? How much should I pay? And what kind? Really? Maybe even how long, right?
Yeah.
And why should I have it in the first place? What are all the possible reasons that we would even want to buy life insurance in the first place? And so let's address the question of how much. To do that, I want to add another circle, and this circle is called human life value, okay? Human life value. Now, you're a father and you're a husband and you've got two beautiful children, right? Human life value represents the value that you are to your family. And Seth, as a father and as a husband, you're irreplaceable. Mom, you're irreplaceable. The children, they're irreplaceable, right? But when we're talking about human life value, we're talking about what is the economic value of a human life. And it's equal to your income earning capacity really over your lifetime. Really, that's what we're talking about. So let's just say as an example that you were earning, we'll just make this up, right? Let's just say that you were earning $70,000 per year. And I asked you, and you told me, and you said, I think I'm going to work 20 more years, as an example, okay? That wouldn't be uncommon for most of us here to work 20 more years. So if we take the $70,000 a year and we multiply that times 20, that's $1.4 million that's going to flow through your family, Seth, over the next 20 years.
Yeah.
So this is what your human life value is worth. Obviously, you're worth a whole lot more to Annie and the kids.
Maybe.
But maybe. But financially, you're worth $1.4 million.
Okay.
So let me ask you this, Seth. Do most people insure their home for its value?
I would think so.
Okay, I think so too. Do most people insure their cars for its value?
Yeah.
Well, if you take that logic, would it make sense also to insure our human life value?
Yeah, it would, if you're looking at it like that.
Okay. So do you think it would be important to have 1.4 million if that's your human life value?
I guess it would be, but is that pretty expensive?
Okay, that's the question, right? So really, I'm going to dovetail as to. And by the way, I don't know if 1.4 million is exactly the right amount, but I think we could ask the question: what is the purpose of owning this life insurance in the first place? For many people, it's replacing income. Now, I think I've told this story many times to many of you. before. When I was a young boy, I was 15 years of age, and I woke up to a house full of people. And it was that time that I learned that my father had died the night before. He was 39 years of age. And my mom had never graduated from high school. And so she was now she had the responsibility now, Seth, to take care of 4 children, 15 years and younger, minimal education. And I think what mom would have really liked if she could have somehow replaced dad's income, at least economically, financially, she would have been okay.
Yeah.
So let's think about this. Here's a rule of thumb for all of you who are listening. For every $1 million of coverage that a person has, we could probably replace somewhere between $40,000 and $50,000 of income per year.
Okay.
Okay.
Mm-hmm.
So I'm going to use the 5% rule. It could be 4%, right? For every million, it's only $40,000 maybe.
Mm-hmm.
But just making this simple, if we were trying to replace $70,000 of earnings, and we were earning 5% on that money, right?
Mm-hmm.
How much would it replace? I'm sorry, the 1.4 million. That's really what I meant to say. Sorry, the 1.4 at 5%. It would replace $70,000 of income. There it is. And so if I had 1.4 million, or you had $1.4 million, if that was the income that you're trying to replace, 1.4 million at 5% would allow you to have income of $70,000, never depleting the principal. That could be a reason. For my family, the number one issue is replacing my income so that Julie and the kids could stay in their whole world, in their own world. What do I mean by staying in your own world? I think the toughest part, not only was it that I lost my father, but I also lost my mother because mom had to go back to work. She didn't have any life insurance to replace that income. So she had to work. And so I remember as a kid, I would come home during the time when my dad was alive, and mom was always home to greet us. And so when my father died, there was no one home. It was empty because mom was working. So not only did we lose my father, but we also lost our mother, really, in many regards.
Okay.
And so life insurance, think about this, for those of you who are on this call, for pennies on the dollar, we can create hundreds of thousands and millions of dollars. Pennies on the dollar. That's the miracle of life insurance. So I don't know, what are your thoughts so far about this?
I mean, that's pretty impressive. You're telling me that with 1.4 million, your wife could have $70,000 a year for life. I mean, that's wonderful. And I mean, here's another question for you. What if I don't have any economic value? What if I'm a stay-at-home dad? Do I need life insurance?
Okay, so there's a good one. In a lot of families today, there are sometimes, in fact, today, I think more than ever, there's 2 income earners in many cases, right? And so each has their own human life value that we could insure based on how much income that they have.
Yeah.
But in my case, in our case, it isn't like this in many homes, but I've been providing the income. I know Julie has worked harder than any of us trying to provide for 8 children, right?
Better be careful.
Right. But there's still a need for life insurance on Julie.
Okay.
There is. And it's not because it's lost economic value. But if something happened to Julie, I would need help caring for children, probably. And that life insurance would help with that.
Yeah. Okay. So it would make sense to have life insurance for a non-working spouse.
Yeah, I think so. And I think all of us have a tremendous value. And like I said earlier, it's a heck of a lot more than just the economic value of loss. But obviously, there would be loss if Julie died as well.
Yeah, definitely.
Yeah.
And now, if I know I need, let's say, $1.4 million in life insurance, what do I do if I can't afford that much?
Okay. So the question, financially, it's always going to come down to how much money do you actually have available cash flow wise. And so if we were looking at it from a financial planning point of view, and we were trying to figure out how much money you had in savings, how much money you had in investments, and we're trying to figure out how much insurance we should buy, the question that I would ask you is, how much money could you save every single month if you really wanted to? And you could do it in your sleep. And let's just say, as an example, that you could save $500 per month. That was all the excess money that you have. So would we take the whole $500 a month and buy life insurance with it?
I don't know, do we?
I don't know. I don't think so. I don't think we would want to do that, especially if we were still trying to build up savings, right? We want to make certain that we have a balanced approach to all this. But I would say that if you don't have any money in savings, you're going to put, this is an urgent element in my financial plan, as well as the insurance circle, right? And so I would probably say, I would probably put not more than 30% of that savings amount, $150 a month, and it might even be only 20%. That might be what we need to do here, okay? And then I would put the balance of that money, the 70%, into savings if I don't have it. And if you recall in our last meeting, the first goal in savings, if you don't have any in there, is $10,000. That is the first goal that we have here in the savings bucket. So you can see when we talk about how much life insurance should we buy, what we're really talking about is, can we replace the income that's lost in the event that mom or dad or both of them passes away? And then the second thing is, how do we finance it? How do we pay for it? And there's only so many dollars. And I would simply say, whatever that 30% buys, if we can get close to replacing income, that's what we want to do.
So never more than 30% usually.
I think that's a good rule of thumb for younger people. I think that number could be different. If we take into consideration, okay, someone is now in retirement. Let's take that example.
Yeah.
So we have a good amount of money. We've got a lot of money in our investment account, right? And we've got a good amount of money in savings by the time we retire. We're trying to ask ourselves the question, I'm in my 60s, should I buy life insurance? I mean, is there still a need for life insurance in my older ages? And my answer to that question is, it depends, right? I mean, you could make a case that if you had no debt and your income was in a good place in your retirement years, and you have no debt whatsoever, and that if one spouse died, there was not a huge economic loss. Maybe there isn't a need for that. But maybe there is. And that is really the reason for a financial plan, by the way, because you really don't know the answer to that question unless we understand where are we at in these other circles. Let me talk about taxation. What do you know? What do you think? If you had a choice, Seth, between a taxable asset or a tax-deferred asset or a tax-free asset, what would you want?
I'd take tax-free all day.
Okay. Everyone on this call would rather have tax-free than taxable or even tax-deferred. The problem with tax-free is that there's very few assets in the tax-free area. And one of them, the big one, is life insurance. The death benefit on a life insurance contract is 100% income tax-free.
Really?
Yeah, totally tax-free.
Always?
Yeah.
Wow.
So that's and of course there's one other in there. There's a Roth IRA for another day, but there's very few things that can provide a tax-free benefit for pennies on the dollar to create large sums of dollars. And maybe we could say this in life insurance. Life insurance creates money that does not exist in large sums for a very small premium payment. And really what life insurance does, Seth, it underwrites time. It says that if I don't have the time to save that money by the time I retire or to pay off all my debts, in a moment, if we had a catastrophic event that took place in our family, that debt or that income could be replaced in an instant for pennies on the dollar. Haley, why don't you put that question back up again? Because I think that was a great question. I missed it. It says, okay, at what age is life insurance less important once we retire and have pensions and IRAs? I think that was really what I was trying to answer at this point right now. At what point? I would say this to you. If you were used to having, Seth, Let's just make this up as an example. Let's suppose that you were used to having a $500,000 life insurance policy all of your life, and now you're at retirement age. The question that I would like to ask our audience is, would you want to have your life insurance go from $500,000 to zero? And my experience over the last 30 years is that most people don't want it to go to zero because there could still be a need. For example, here's a couple of examples, if I could, other needs. Another need for life insurance, in addition to replacing income, is paying off debt. So if you're 65 years of age and you still have a pretty large mortgage, the life insurance would be a great tool to pay off those debts. And I've often thought that your debt should not last longer than you do. If you die, your debt should die with you, and life insurance would pay that off, would pay off your debts. There's one place. Here's another place where life insurance could have an effect. When you retire, if both you and your wife, or husband and wife, however that goes, we're both working, probably have a Social Security benefit. In my case, my Julie stayed home and worked harder than I did. I know that. But she doesn't have a Social Security benefit, or does she? She actually has a spousal benefit. And so let's just suppose, for example, that my Social Security benefit is $3,000 a month, and Julie is getting somewhere close to half of that amount. But one of us dies. Did you know that the lower Social Security amount is going to go away?
Okay.
So here's another reason for life insurance. I could buy enough life insurance to replace the lost income of the Social Security at death. That's another way. It's a fancy way of saying, did you know that you could insure your Social Security payment if one of you died? Yeah. There could be another reason for life insurance. The same would be true for a pension plan where at the death of the primary worker, maybe they've got $5,000 a month that's coming to them, and then at his death, that the only thing that their pension department offered was a 50% benefit to the spouse. So the $50,000 or the $5,000 a month was reduced to $2,500 a month. We could insure your pension to make up the lost income. There's another reason for life insurance. I'll give you another one. Has anyone ever said to you, do you know that you can insure your IRA? Now, why would anyone want to do that? When you have an IRA account, whether your spouse inherits it or your children inherit it, how much of it is taxable?
All of it?
All of it. 100% of your IRA assets. So let's just say, as an example, your children are going to inherit a $500,000 IRA account. And let's suppose that the taxes on that IRA are 30%. That's $150,000. I could use life insurance to pay that tax bill. Instead of the children receiving $500,000, they receive, minus the taxes, they receive the entire $500,000, and the life insurance pays the tax bill.
Wow, didn't know that.
Yeah. If you're a business owner, there's another. We could insure taking care of, if a business owner died, we could buy life insurance on a partner to make certain that there was money available in the event of his death.
Okay.
So we have 10 minutes left, but I want to talk about just one other aspect, if I may, and that is, do you think people have a question, Seth, about what kind should I buy?
Yeah, I mean, we talk about insurance a lot, and people talk about guaranteed universal life insurance, index universal life insurance, term insurance. What does it all mean? I mean, is one better than another?
Okay. So a simple way to talk about that is there's really two different things. They call them different things: whole life, universal life, index universal life, term insurance, right? Guaranteed universal life, all of these things. But there's really only two kinds at the end of the day. There's term insurance, which is temporary. When we talk about temporary insurance, we're talking about how can I buy the largest amount of insurance for the cheapest amount for a period of time. So if we had a young person here and they said we needed 1.4 million and their cash flow was only $500 a month and they could only allocate a small amount of money to that insurance bucket, no one's going to ask the question, did you die with term insurance or with permanent insurance? They're only going to ask one question: did I have enough to keep my family in their own world? That's the question that they are going to ask. That's the question all of us are going to ask. So if you have a large insurance need and you have small amount of cash flow, then you would probably buy term insurance, most likely. And that term insurance, the premium on it would be relatively inexpensive, and it would be guaranteed for a length of time. It could be 10 years guaranteed. If it was for 15, it'd be a little more expensive, but it would be guaranteed for 15 or 20 or 30. That's all term insurance. And at the end of that level premium payment period, the premiums will go up exponentially. Most likely you'll drop the contract and your insurance is over. Why? Because the insurance is forcing you to get another medical exam to get a new policy.
Okay.
So term insurance is temporary insurance, and permanent insurance is insurance that could be enforced till age 100, to your entire life expectancy. Whole life coverage will be enforced, guaranteed, till age 100 or beyond. Universal life insurance coverage is coverage that you design it. How long do you want it? Till age 80, 85, till age 90. And it also builds up cash value, which we don't have time to address. The cash value in a contract is very powerful because it's your money that you can get to while you're alive. And I'll leave it at that at this point here. So really, there's two different types. Term insurance, temporary, permanent for life, and usually a combination of the two, a larger amount of term insurance and a small amount of permanent, so that when the term insurance drops off, you're left with something and it doesn't go to zero.
Yeah, that would be nice.
Does that help?
Yeah.
Joyce asked the question. She said, do we need life insurance if children are grown up? By the way, it's not uncommon, Seth, for a mother and father to buy life insurance on their children, and they pay for it.
Mm-hmm.
And
kids pay for it.
Well, your mom and dad pay for it and when they're young.
Mm-hmm.
But I want you to know, at some point in time, it's not a bad idea to transfer the ownership to the children and have them pay for the rest of it. And if they bought it when they were really young, the premium is really inexpensive.
Mm-hmm.
But it's easy. You just simply transfer the ownership to the children. Now they pay for it, and then they name their spouse or their family as beneficiaries.
Okay.
So that would be simple to do that. And by the way, I think that's a marvelous gift. Life insurance is a wonderful gift you could give to your children. And one of the ways you pay that gift is you pay for it early on when they're young, and then when they get financially in a place where they can do it, then you transfer the policy to them and they can do that.
Yeah. Wow.
Greg asked the question: is long-term care important, and what does it cost? A little bit off topic from here, but I want you to know that I will just simply say for long-term care, the numbers, the percentages of people that may need long-term care in their life, and that would either be for care at home. I mean, if we all had a preference, who wants to go to a nursing home? Nobody, right? We'd like to have home care. So that's usually the preference. Or assisted living, which is a hybrid type of sometimes it's an apartment type place, and you need care part of the time, and the rest you can care for yourself. And then there's full-blown nursing care. But the question comes up as to how do we pay for it? And that's for our next topic, by the way, which is going to happen on June 3rd. We're going to take a deep dive into long-term care. And so is long-term care important? I will just say to you, my mother was in a memory care unit and assisted living for a little shy of 3 years. And I want you to know that the bill was about $7,800 a month. And we were forced to, with mother, to prepay it out of her investments. We watched her entire investment accounts drain to almost nothing, because you have to take care of the well spouse who's at home still, and the sick spouse who needs care. And so insurance can play a marvelous role in that. And in our next meeting, I'll show you a very incredible way to not only have long-term care insurance, but to have the cash that you paid into that policy always available to you. So you don't want to miss that next meeting that we're going to have.
Yeah. I think we had one more question here. Kay asked, so can you borrow against the life insurance policy?
The answer is yes. And when we talk about borrowing, we worry about, well, I have to pay the interest. Well, you do have an interest payment on a life policy, and typically you can borrow up to the cash value. About 90% of the cash value is what you can borrow. Okay, so if you had $100,000 in cash value, the cash value, which is the savings component of a permanent life policy. You can't borrow against the term policy, only permanent insurance. You could probably get to 90% of it. And whatever the interest was that you had to pay in that policy goes back into your contract. The insurance company doesn't keep the interest. It's like when you take a 401k loan. Okay, when you take a 401k loan, there's an interest component that you have to pay. But where does the interest go? It goes right back into your retirement account. And a loan on a life insurance contract also reduces the death benefit dollar for dollar. So if you have a $50,000 loan on your policy and your policy death benefit is $100,000 at death, it'll pay 50. It'll pay the balance. So the collateral for the loan on the life insurance contract is the death benefit.
Okay, so it does come at a cost.
Yeah.
Okay.
Well, we are. By the way, Bud asked the question. Who will win in the future, gold, crypto, or fiat currency? And my answer is, and the crystal ball says, and we'll talk about that in our next meeting that we talk about in investments. And obviously, if you're watching what the cryptocurrency and the Bitcoin is doing, it is like a roller coaster like never before. When we talk about fiat currencies, we're really talking about the currency that we're used to using our dollars. And so we're going to now we've got 2 minutes left, and we're going to spin the wheel for our raffle. And all right, Lisa, would you spin the wheel, please? Hold on a second. Let's see what the wheel says. All right, and the winner is Bud Reed. Bud, you just won a $25 gift certificate. And we'll make certain that our team gets that to you. Seth, any closing comments about what we've talked about today? Any thoughts you have about these things?
Not really. I just, I think a lot of people don't think about insurance when they think about their financial lives, and it does play a critical role, and everybody needs to be thinking about it and prepare for it and get it if they don't have it.
I remember early on, 30 years ago, I memorized this for insurance. You've got to get it when you don't want it in order to have it when you need it. I don't like paying the premium, but I do want to make certain that Julie and the children can stay in their own world, because I don't have a crystal ball as to what tomorrow holds. None of us do. And so I think, and personally, I think life insurance is one of the great wonders of the finance world. Where can you go that for pennies on the dollar, you could create hundreds, thousands, millions for pennies on the dollar, delivered in exactly the right amount, exactly when it's needed most. And that's the miracle of life insurance. I hope you all make certain, and I hope all of you will consider that this is an important part of your financial planning. It's not just all or nothing. It's all one part of your financial plan. I would like to thank you, Seth and I, for being with us today. We hope this topic has been helpful, and have an amazing week. Take care.